All right, let's talk about the 2018-2019 supply season. I'm Jon Miller. You've probably read some of my Propane Buzz blogs, seen some of these videos if you're watching this, or if someone has forwarded this to you and you're seeing it for the first time, you can read more of my thoughts at propanebuzz.com. I've spent well over a decade wholesaling propane in the United States on multiple pipelines in multiple regions down the Southeast and the Dixie, Ohio Valley, Northeast, Illinois, Iowa, Midwest. Been there, done that, as they like to say. Let's get into talking about what is to come, what's happened, why it's happening, where I think things are heading. So let's move over here, and we will continue on with the outlook. I want to draw your attention here to exports. Exports is basically where it's at for our industry. I'll talk a little bit more about that as we get further on in this, but to plant the seed for your thinking and why exports are so important is because any more winter seems like, I don't know, is it 5 weeks? Is it 8 weeks? Is it 12 weeks in a really good year? That'd be a really good year. It's probably less than 12 weeks where export demand is a far larger consumer of American propane. It's a 52-week year-round affair. So exports is something that you need to pay a lot of attention to, and that's why I do when I talk to you and write to you. So here's where we are right now. This is data that I compile, that I pull from the weekly EIA reports. So this past week, the EIA report through February 9th, we were on 45.6 million barrels of inventory nationally. Last year at this same time, 53.3 million barrels. So we have nearly 8 million barrels less propane on hand in storage right now than we did a year ago. And if you look back to the beginning of last year, sorry you can't see through this opacity here, but coming out of April last year, we finished just below 40 million barrels of inventory. 39.7 million barrels of inventory is what we had on hand last April. Compared to the previous April, where we had right around 70 million barrels heading into the inventory building season. It's a key component and factor as we discuss why last year was what it was and some of the similarities that we'll start this year's supply year with. And we'll talk about those connections, or if there are any connections, even though we could be in a very similar position. Now, last April of 2017, as you can see in this next slide, Citibank gave some comments pursuant to propane. Quoting this, Citibank came away with the suggestion that U.S. stocks of propane could be drastically short of needs when next winter looms. Now, next winter is the winter that we're in right now, because this was written in April. Citi suggests that what happened in propane this past winter, the winter of 16-17, may serve as a template for future years, citing an ongoing structural change in U.S. markets. Citi expects sharp winter price rises in U.S. propane to be an ongoing phenomenon rather than a one-time event. Excess export capacity stateside should keep the U.S. more in tune with global pricing, and that global seasonality will be transmitted to U.S. markets, leading to stronger winter numbers going forward. Now, going back up in that, where it says Citi suggests what happened in propane this winter, again, we're talking winter of 16-17, which is last winter, but it was this winter when this was written, may serve as a template for future years, citing an ongoing structural change in U.S. markets. To refresh your memory, 16-17, one of the warmest winters, if not the warmest winter for a United States gas-weighted heating degree basis of all time, or at least in recorded history. Let's just go with recorded history, because how would we know all time? And it was the largest drawdown from inventory peak, roughly end of September, end of October, to inventory low, which is typically end of March, or in last year's instance, the end of April. The largest seasonal drawdown in propane inventories in recorded history, in the warmest winter in recorded history. Those two things typically wouldn't be something you would predict. Certainly you wouldn't predict that based upon the history that most of us have lived through since the 1980s, 1990s, in the 2000s in the propane industry. But that's what happened last year. It's how we got down below 40 million barrels of inventory. Now, 40 million barrels of inventory at the end of the year, say 5 years ago, would have been like, my gosh, what a mild winter. Because inventory peaks were, 65, get to 65, 70 million barrels. The psychological comfort level was there in the trading community, and you weren't going to see, inventory-based volatility because of that. But 40 million barrels now, when we've reached an inventory high in 2015 and 2016 of over 100 million barrels, that's a big drawdown. It's a very big drawdown. So Citi's saying, due to the exports, due to this new export capacity that we have, which is probably roughly 1.5 million barrels a day of takeaway capacity out of this country, you're going to see some, in-season price spikes. What did we see in 16-17? Well, in late November of 2016, we saw prices somewhere in the mid to upper 50s in Mont Belvieu. And then on February 2nd, we saw prices get to over 90 cents. So you're talking nearly a 40-cent rise in a 3 to 3.5 month, or not less than a 3-month period in the warmest winter in recorded history because of exports. So going with what Citi said here and moving forward, what happened this year? What happened in the 17-18 season? That Citi comment that I gave you was came out in April of 2017, before the season that we just had, and that I wrote about in the Propane Buzz blog back in April of last year, sharing my concerns. I have remembered writing several blogs in March and April saying, hey, pricing right now seems to be like it's a pretty good deal because of the way inventories are. It seems to be there could be some fear in the trading community, and we could see a price spike run up. I felt far more confident to the upside than the downside. March 27th, 2017, spot trading Mont Belvieu, roughly 57 cents per gallon. Inventory levels, as we mentioned, were just below 40 million barrels. April witnessed just the second April stock drawdown going back to 1985. There's only been 2 times that we've seen inventories draw down in April. Last year was one of them. So there was a good deal of fear in the marketplace last spring and last summer, which helped drive prices higher at a time when you typically don't see that. Inventories peaked just below 83 million barrels in the middle of the month of September. They ended the month lower than that. Spot trading at Belvieu by the time we got to the end of September, or September 27th, which is 6 months after March 27th. You see that quick math on the fly there. Talking about a 40 cent per gallon gain, roughly, in Mont Belvieu spot prices. And in Conway market also went up. The forecasts at that point in time for a colder winter were nearly unanimous. Remember MDA coming out with their forecast in late August, BAMWX.com coming out with their forecast in late September, talking about cold, talking about how this year was going to be a colder than normal forecast based upon the drivers they saw. And I think by and large, they did a great job, and everybody who called for a cold winter this year has done a pretty good job. Now, February is not shaping up the way that many of us would like. There's still hope for March to turn out in the favor of the home heating industry, if you want some HDDs. But I think by and large, it was a decent call. And Mont Belvieu spot trading topped around $1 a gallon in November. And the coldest air in years came down over North America, the upper Midwest, the Great Lakes, the Ohio Valley, the Northeast, matriculating its way down into the Dixie Pipeline, snow in Texas, etc., etc., right around Christmas or just on the heels of Christmas and through much of the month of January. The January 1st through January 8th time frame saw, I think, record amounts of natural gas as far as BCF is concerned ever recorded in a week. So we had some serious cold and some serious demand, and that led to some serious price spikes. As I write here, some off-hub locations saw their highest prices since the first quarter of 2014. And if you were in the industry at that point in time, you remember that, when we saw Conway wholesale prices spike to up near $4 a gallon, and Belvieu was just $1 to $1.50 behind it. That was some nasty times. But look at how unique this year is compared to 2014. I just got done saying in 2014 we saw values at the trading hubs skyrocket, and that made its way to the terminal where you lived, higher prices as well. But this year was different. Look at this year. So here are some average wholesale prices for the given week. This comes from the EIA's website. Now this is under propane and heating oil prices, so don't use this as specifically gospel to specific price averages where you live. Obviously it's listed by the state here, but this just gives you an idea and a reminder of the trajectory that we felt this year. Look at Indiana, this January 22nd week. Highest prices in the country on the average at that point in time, although I know that there were some areas up in the Northeast where spot product was selling for higher than this. I think I heard some prices over $2 a gallon delivered in. So you had Indiana this week at its highest price of the year, Michigan at $133, Pennsylvania $138, New York $154, Illinois $147.90, which was led by what was going on in the Chicago marketplace at that time. So much product was, record amounts of propane moved through the Chicago market, and that speaks volumes. There's a lot of product that goes through that marketplace. You're talking about supplying the northern half of Illinois, the northern half of Indiana by and large, the southern half of Wisconsin, the southern half of Michigan. That is a very important and key supply point in the American propane infrastructure, and the prices just shot up. Ohio, $1.35 now. It was more than that coming from a lot of places. But look at places like Iowa. That week, 101. Look at Minnesota, $1.03. You're talking about significant gaps of pricing here. What does Iowa and Minnesota, by and large, have in common that maybe these other states don't? I'll tell you what it is. The pipeline, the Mid-American Pipeline, MAPCO, whatever you want to call it, or the One Oak Pipeline system feeds much of Missouri, Kansas, Minnesota, Iowa, all right? And the pricing for those areas is based off of the Conway trading hub. The prices in Indiana, Michigan, Pennsylvania by and large, New York by and large, the northern half of Illinois, Ohio, we're talking about off-hub locations. There is the TEPCO pipeline that goes from Mont Belvieu, Texas, all the way up into New York, and there's terminals in the state of Ohio. There's terminals in Princeton, Indiana. There's terminals in western PA and up into New York. But there's not much long-haul propane being originated from Mont Belvieu up into the Northeast. The pipeline is a delivery mechanism in a lot of instances, but it's done so based upon production injections of facilities all the way up the line. So we're talking about, if this is the hub, if Mont Belvieu is the hub, and up here is the Northeast and the Ohio Valley, this is off hub. Time was where the gas used to come from here, make its way up the pipeline to here, so it was still tied to hub pricing. But now you have all these little gas plants up here that are feeding into that, or they're just selling their gas right out of their gas plant. So those are off hub. And off hub price spikes is what I think we'll see more and more of as we move forward in this new era of propane, especially with the exports. Now the exports have the ability to move the hubs up and down quicker than ever before. Time was where it was hard to break out of a bull or bear channel, in a matter of a couple of weeks. And you could see some crazy spikes like we saw in 2014, and then you'd come back down, but it would take a long amount of time to unwind those inventory surpluses or deficiencies to build back up from a deficiency. Not so much anymore. Not so much with the incredible ability to export a lot of propane that we have now. So probably going to see more in-year, in-supply season volatility than we ever have at any time before. And that becomes a bigger trick to manage for sure. Moving on here. This is a look at what we've seen in recent winters pursuant to wholesale retail prices. This is January. These lines take into effect October 1st of that given supply year through March 31st of that given supply year. So right here is 13-14. See if I can embed this. Yeah, I'm going to just go pull this up so you can see it a little bit more dynamically. So there you go. You got January 27th of 2014, $3.50 54 cents a gallon. Then down here in 20, I need to go back to this because you're not going to be able to see it. This is 15.16. Propane production was incredibly strong. This is 14.15, 15.16. You also had OPEC at that point in time putting out a lot of crude. We'll talk about that in a second. And then here's last year, and here's that price spike I was telling you about earlier from November of 2016 through February of 2017, and then this year, you're familiar with that. So the outlook for 2018 and 2019, in my opinion. Propane production right now is strong at the present time. And I don't know that that's going to back off anytime soon. Exports, very fluid, as we've talked about. They can scale up quickly. They can pull back quickly. Last week's 3.3 million barrel draw was due to exports. You had propane consumption or demand that was off 25% from where it was a couple of weeks ago, but you had exports well over 1 million barrels per day. Where the previous week they were just at 600 and some. That's a 50% increase in exports, 25% decrease in production, and you had a bigger draw. So that's what I'm talking about with the quick liquidity and volatility that is in our marketplace now with exports. Can't be ignored, and you're going to need to accept that we got to buckle up a little bit more in this industry than we ever have before, because there are whipsaw opportunities in much shorter windows of time than there used to be. Propane to crude ratios right now, it's up in the high 40 percentile range in Conway, mid 50 percentile range in Bellevue. I mean, if you look historically, 50 to 60%. If you look historically over the last 15, 20 years, 50 to 60%. That's kind of a normal, if you will, ratio. But, if you look back at history the last 4 to 5 years, we've seen those ratios out of whack, like in 14-15 and 15-16, where those ratios were down in the 30 percentile range or low 40 percentile range. But remember, we also had OPEC doing what they were doing. They were trying to hammer and hurt the shale companies from the 14 into 15, the summer of 14 into 15, just produce whatever you want, and it worked. I mean, you got to January of 2016, and you had crude oil down around, I don't know, was it $27 a barrel? Somewhere in that range, and you had propane at its lowest prices in decades, which is why in December of 15, I was telling my clients, buy for next year, buy for 2 years. And so the cheapest propane that some of my clients lifted in the winter of 17-18, they bought in January of 2016 because they did buy 2 years out. Some things are just easier to predict than others. We may end this season, by the end of March, with propane values or propane inventory levels pretty much exactly near where they were 1 year ago at the same time. Something to keep in mind here. Now, will those similar levels lead to similar pricing movements? Remember, last year was the first time, quote unquote, the first time we'd gone through a situation like, oh my gosh, it's the end of April. We just drew down inventories again. We're under 40 million barrels. It's the biggest ever April to September build of 53.5 million barrels only puts us at 93.5 million barrels. Will that be enough? I thought we'd be between 83 and 85. We were at 82. That created a lot of fear because it was uncertain. Hadn't been through that before. Uncertainty creates more fear. And from March through September and into November, propane prices nearly doubled. It did double, actually, around 96, 95%. So that's a lot of fear. But this year we've been through something like this. So if we come out of this winter exactly where we started last winter, I don't believe it's logical to assume that the markets will behave the same way they did last year because we made it through this winter. The unknown is now known. And when you have a known, you have less fear. So my sentimentality right now, looking at, end of the first quarter, we're in the middle of the first quarter right now, 2018, towards the end of the first quarter and out in the second quarter is, I think people might be holding back, waiting to see what happens. I don't think there's going to be a lot of rush or hurrying for people to load up on contracting this year, to go heavy on it earlier, even though a lot of you felt some pricing pain this past year. I think those of you that have the opportunity to go and contract up your indexes and get your seat on the bus and determine the price of that seat later, that's obviously something you need to do. You need to secure your supply if you're in an index area or heavily there. Like I said, I think there's more bears than bull market sentimentalities right now. The marketplace seemingly is oversupplied, in my opinion. The Mariner East 2 pipeline is a great concern up in the Ohio Valley and up into the Northeast. When's it going to come online? What's another interesting thing is I'm hearing similar timelines right now that I was hearing last year at this time. Oh, it'll be up in July. Oh, no, it'll be up in November. That's a pretty big deal, because if people are out expecting it to come online in July and it doesn't, the market surplus that has maybe plagued is the right word, eastern Ohio and western Pennsylvania the last several years doesn't go away. There it is. But your producers may think that the barrel is worth more than it probably is. So that is kind of an impasse that has to get nuanced out, and that's why I said here, value debate shaping up between production and market realities in some regions. A large Bellevue to Conway spread. Could that lead to Conway struggling to build inventory back for next year? Right now, the Conway to Bellevue spread has been going between 8, 9, 10 cents per gallon in month, and then when you go farther out the curve a little bit, it's still pretty wide. So that would lead me to think that you'll see product flowing south out of Conway to Bellevue to take advantage of that spread and net back and put profit in your pocket. So I'm not saying that's going to happen. It's certainly something to consider and watch, and I'll certainly do that for you. And as I mentioned earlier, exports remain our master. How long does real winter demand last anymore versus the 365-day per year impact that we see from propane exports? And this is the last slide. On the whole, I expect less panic buying this year compared to last year. More buying, not trading per se. I'm talking about, I don't know that retailers, and that's specifically what I'm talking about because that's the world that I live in. Retailers are going to be going out and loading the boat early just because things seem a little soft right now as the market's trying to find its footing. Cost averaging to the downside is just as effective as cost averaging to the upside. I've said this for years and I believe it. If I was in a retailer's position, I would hope that the first price that I paid for propane of the year is the highest that I pay, because that means I'm buying it cheaper the rest of the way. I don't look back and say, gosh dang it, why didn't I buy gas, or wait to buy gas when it got lower. Don't do that to yourself. As a friend of mine likes to say, pigs get fat and hogs get slaughtered. So when you try to guess the market's top, or you try to guess the market's bottom when it comes to contracting, very rarely are you ever going to guess it right. And if you do guess it right and you move all of your chips in and make all of your purchases at the bottom, congratulations, you hit the lottery. But people, when you do that, when you wait and make the majority of your buy on one number, that's a big time risk. And I always advise against that. And I'm always a proponent of cost averaging, taking smaller bites and blending things together. I'll have obviously more to write about and talk about in the coming weeks, as tis the season to talk about contracting and buying and looking at market fundamentals and where things are headed. But for now, that'll do it for this installment of the Propane Buzz. Thank you for watching. And if you have any friends in the industry that you feel could benefit from something like this, go ahead and forward them the link. And I appreciate you taking time to watch it. We'll talk to you soon.